Let me get started, and I will record this session and post it up later on our Facebook, on our YouTube page. So just to introduce myself very quickly, my name is Snehat Dias, and I am the Chief Trainer at HarmonicForex, and we're a company based out of Singapore. We specialize in trading Forex, mainly using harmonics, and the idea of this session is to really give you some insight around the trades that we've taken, some lessons learned, and also to let you know what are the upcoming trades that we can trade together. So I hope you guys can hear me loud and clear. I have muted your lines so that there isn't any disturbance, but if you do come across any issues, just put it in the chat box and I will pick it up from there. Okay, so the first one I want to look at is the New Zealand dollar. So let's very quickly take a look at this trade that we put out just about it wasn't yesterday, I think it was yesterday, so just 2 days ago. And you know how I like to analyze the charts is really by drawing these blue boxes. So it's not very confusing, but what I essentially do is at the end of every week I will go down to the 4-hour chart and I'll draw a box, because I like to see where is the market in perspective to last week. So these boxes, it kind of helps me to know that, okay, this was a high and then it came down quite a bit and it's coming up to that next high again. So if you look at it on a daily chart, which means each of these candles represents a daily chart, you could see that the New Zealand dollar is steadily going up. Okay, and what that means is that the New Zealand dollar is strengthening and the US dollar is weakening. But when it came over here at around 70 40 something, there was a pattern to short. Okay, and sure enough the market came down and then it came back up again. So how do I know whether there is a pattern to short? I'll switch over to Formation Seeker and let me find the New Zealand dollar. So if you look at the H4 chart, which means it's each bar is 4 hours, you could see that there was this bearish butterfly that was being created. So how the patterns are created is something that we cover during our course, but this software called Formation Seeker plots it out for you. And you could see that the lines where this market was supposed to turn was coming in around 69.90, 70.28 and 70.40. So we know that this trade is valid only when it hits all three of these lines, and you would see that the software is able to plot this line here, this white candle, which is our trigger bar, and that's the bar that touches all of these lines. Now after that, what happened was that you would see that it steadies for a couple of hours. These are 4 hours, so which means you'll have to wait for about 8 hours. I did not enter the first round of this because I think I was traveling. I think I was in Australia during this time, so I kind of missed out this trade. But this is really beautiful in terms of the alignment with HSI. So you would see that this guy, the HSI value, starts moving down somewhere around this candle, and this is where I would pull the trigger. Okay, you'll pull the trigger, and of course you'll follow the stops. Put the stops somewhere around. You could follow this stops here, but maybe it could be just above this high as well. So let's say you shorted somewhere around 70.40, and then you could put your stop loss maybe at around 30 pips. And after that, you'll see that this guy started declining quite rapidly. And what we do is we would draw a trend line just aligning the tops of this descent. Okay, so how we would look to take profit is, as long as this line is violated. So maybe I would have drawn it something like this, and as long as there is a clean candle break above this, I would look to take profit. So it's a very aggressive way of taking profits, but see, this is a 4-hourly chart, so you can check back every 4 hours to see what's going to happen. This would have been in a downtrend for about 2.5 days, and it's only somewhere around here that you'll see that it's starting to break out, and you would close the trade. And this would have been a fabulous trade. Would have been 30 pips or 40 pips risk to get about 200. So roughly 1:5 risk to reward. So if you risk like $1,000 on trade, you would end up with about 5,000 by the time you get out of here for about 2.5 days of work. Okay, so that was our, this is what you call a type 1 test, which means the market will come and test this level, and then there would be a reaction. Now, what we know is that in harmonics, we know that there is something called a type 2 test. That means once this test happens, there is going to be some reaction and the market will come back up and test this blue line. So we missed the first opportunity of getting 200 pips, but we were quite adamant that this time around we were not going to miss our next opportunity. So we were looking for something called a type 2 around here, and once this happened and once we saw this reaction downwards, we decided, okay, this is a good level to short, and we queued up our trade somewhere here. So you can see that it reacted quite nicely. In fact, we put this signal out yesterday morning, I believe, and within a couple of 4-hour bars, we've got this down movement, and you can see that it's continuing to move downwards. It's a bit annoying at this point of time because it's not breaking below this 68.72 level, but look at this from a technical chart perspective. So I'm seeing here that this is a huge double top, okay, and the level that we need to break is somewhere around here. So this is going to be the critical level if it can come down to 68.12. But I feel pretty confident that this market should continue to go downwards, and we might have caught the big level that we shorted it at. So you can see that I sold it somewhere around here, and stop loss has been moved to somewhere here. But essentially, we are hopeful that this guy should continue to come down lower. You've got to be patient with these kind of trades because it is a 4-hourly trade. So how are we managing this trade? The first thing that I would do is so I'm not sure if you're familiar with this trend line by angle. Draw a 45-degree line here. If this line is ever violated, so let me maybe make it a bit fatter so that you can see it much better. If this line is violated, you get out of the trade. You also need to draw accelerated trend line, which is the trend line where it's moving along this fast-paced line. So at the moment, it seems to be threatening to break out of this, but I haven't seen a clean break. You can see that it is getting resisted by the trend line, and it's quite annoying because you're seeing these bars, pin bars. There was one pin bar, there was another one. If you look at this on H1, you would see that there are quite a few pin bars. You can see 1, 2 here. So chances are that this will continue lower, but I don't know. I'm going to be very defensive about this. So in a type 2 situation, remember in the type 1, you will take your profits very quickly. As soon as this fellow breaks, you will take your money as soon as the accelerated trend line is broken. But in a type 2, you need to give it a bit more breathing space. So it's okay if this guy breaks, and as long as it doesn't break this trend line, you should look to stay in the trade. But easier said than done because this guy is showing some support at this level. So we'll have to wait and see how this pans out. but I at least would like to see it go down to 68.10, 68.20, which means we would have gotten about 200 pips from the level that we shorted, and that would be a nice ride. And just really looking at it from a chart perspective, you would see that, okay, let's try to draw some trend lines. So I'll take all of this out, and you would see that this, okay, maybe this is the trend line that we're looking at. If this guy can break very clearly, which means if it hits 68.10, it means this trend line has been violated, and this has been present since March. Okay, we might be able to even draw it lower, so let's take a look at this. Okay, so not very pretty, but maybe something like this. Okay, so other than for this gap here, I feel that this is a very good trend line. So if this guy can break through this, it's going to be a crazy ride down. So you'll see that you'll be asking me maybe what are these blue lines. These blue lines are the monthly support and resistance that I just mark out every month so that I know, okay, where did the market close. And that was another reason that this was a good short, because you know that this was April high and it's coming back up to test in May. So it also gives you another additional level of security that you could short this market. So I'm looking for this guy, hopefully to touch 86.10, which is going to be a nice bounce up, and maybe we will see a nice continuation to the downside. But you know, it's very hard to predict how the markets would move. You just have to be ready for both scenarios. So if it goes up, it's going to take us out with about 65 pips. If it continues down, it's going to be a very nice ride. So that's my thought on the New Zealand dollar. So let's keep our fingers crossed and hope that this guy will continue to fall down. Okay, I'm going to switch over to the CAD Swiss. Okay, now this guy was a very, very annoying trade for us, and I'll tell you what happened was that there was a bat pattern to short, and this is a massive bat pattern which was in the making from almost December last year. So you could see that, you know, patterns are really, it stands the test of time, and even if it's on a daily chart or a weekly chart, you would see that these patterns are respected. Now what happened here was that we call for a short at 77.20, but what we didn't manage very well was this continuous bounce up and down, which took us out twice at break even. Now there was a reason for this, and you know, everything has a reason as to why it bounced here and came back up and took us out. So in the end, we just didn't make any money off this, which was very frustrating because we knew the big move was coming, and it is really a humongous move. We are at around 300 pips, almost at about 300 pips, and the funniest thing is that it hasn't hit target 1 yet. So this was something that really got away from us. And you know what we do is we did a bit of an analysis. So if I go down to the M30 chart, I hope this is still there. Oh man, has it disappeared? Okay, what was it? M15. Let me just try and find that pattern. Now I think the pattern has gone, but there was a sharp pattern on the M30 chart at these levels that were bouncing. So it was a mental note that we had to start making. Let me just draw. Okay, so we shorted it somewhere around here. This was the line that we shorted at. But what was happening was that there was a pattern to long here, which was a M30 pattern. Now, you've got to always be mindful of the trend when you are taking a trade. The trend, as far as CAD Swiss was concerned in the middle of last week, was still uptrend, which means any sort of bullish pattern, which was the one that we saw here, which unfortunately cannot be seen now, should be respected. So we should have gone down to the smaller time frame and seen this pattern, and then we should have said, okay, when it comes here, or we will be very aggressive. If there's any bounce here, we will take the money and run. So we could have caught 50 pips here, and on the flip side, we could have longed this and caught another 50 pips here, and then we could have shorted it on the type 2 test, caught another 50 pips downwards, longed it on the type 2 test of this pattern, and caught this move. And then after that, we could have potentially shorted here, but our rules say that we should not short for the third time. So there's only a type 1 and a type 2. So we could have really taken, this much, we could have dealt with this much better. And it was a lesson that we learned. And in fact, when I'm trading this guy, I'm always on the lookout for smaller patterns. So if I see some sort of pattern to go long, I'm very mindful that, I've got to start thinking about protecting myself. So at the moment, I'm not seeing anything. This was the only pattern that was there, which kind of bashed through, so that was fine. But beyond that, I'm not seeing anything. So it was a bit sad that we could not catch this big move, because we knew once this guy falls, it'll be a massive move. Because if you go back here and look at CAD Swiss, you'll see that the reversal patterns are here. So it's always good to understand how the chart works, because you need to look out for these kind of reversal patterns, and then based on that you can make a decision, but you've got to be patient. This took about 5 or 6 days, and you could see that it was getting blocked quite a number of times. We got the entry right, just that we just couldn't hold on. So now this guy is continuing to fall, and interestingly, on the H1 time frame, I was expecting this pattern to work out. Okay, this is a shark bullish pattern, but it did not go through. But we did not release it as a signal, because we kind of realized that this guy was not in a very good situation. So let's try to reflect upon this trade. So this is your terminal bar, and you could see that you're deep in the oversold area. So you need to see some sort of coming out of this zone, which never really happened. And even if you take this as your lowest point, you wouldn't want to place a long here because of the HSI indication, which shows that it's in an overbought situation. So that's why we decided, okay, we're going to let this go by. And I think, true enough, we've seen a bit of a fall here. Okay, so that's CAD Swiss, which I think is continuing to fall. So in the event that we were holding on to a short position, I would have said that we would continue to hold this, and yeah, that would have been a really good move. But okay, we learn our lessons and we move on to the next trade. Okay, so we've covered off New Zealand dollar. This was something that I released on my TradingView. So if you guys if you're on TradingView, wow, this is not supposed to happen. Looks like TradingView is down, but if you are on TradingView, you can follow me. I tend to post quite a few ideas there, but looks like it's not working at the moment. But once again, it goes back to my analysis here. Now, I saw this once again, that this, if I fatten this up a bit, this is what happened during the last month. So this is last month's high, April high, and then it came and tested it back again. So during this test, I saw a pattern somewhere here, and I felt it was a good level to short, because whenever you have a monthly high or a weekly high coinciding with a harmonic pattern, I feel those are the most powerful, and that's why I was quite happy to take that. So let me see if this thing works again. Okay, I'll try to go to the main page, which also doesn't work. So now what I'm seeing now is that there is another opportunity for us to short this guy. Now what I hate about this pair is that it's so slow, and it frustrates the hell out of you. It'll move like 2-3 pips hour. So you could see that the daily average is 44. But having said that, this, given the fact that there is another pattern that's coming up here, now I wouldn't have simply shorted it at the high. So let's look at the high. The high is 1.1015. I wouldn't simply short it at that level, but because there is a pattern coming up, there is the April high, there is a May high, this might be a very big move to the downside. So what that would mean is you could be potentially risking about, I would say I'll put 25 pips just to be certain, because even the spread on this is a bit nasty. And then maybe you could look to aim for about 150 pips. So maybe about a risk to reward of 1 to 6, which is excellent, but you'll have to be patient. Maybe it'll take you about 20-30 days to get there. But I feel it's going to be a good trade, because you've got 1, 2 resistance. You've got this resistance somewhere from way back when. That's why I have this blue line here. In fact, there's another line that I would just draw here as well. So for the pair to break this, they've got to really fight hard. So I feel that this might be a very nice move. So keep an eye on this. This is Euro Swiss, a bit of a boring, laborious pair, but still, you know, if you can make a trade, you can make some money off it, why not? So I would watch for this level to get tested. It is most likely to go and test this high again. That's how we would generally see it. It's only 5 to 6 pips away. Maybe you could observe what's happening here and then get into the trade. So let's look at HSI at the moment. It's at 67, so just nice. This guy, by the time it comes up here, it would be in that overbought situation. So looks good from both sides. I'll be very excited to take this trade hopefully tomorrow, or maybe Friday. If it's Friday, maybe you could wait till next Monday. All right, so let's see what's up next. All right, there was a pattern here to short. How come that has disappeared? So the pattern was valid, but I felt it was violated. So because of that, it's not a trade that we could have taken. Here we go. Okay, so it is on the, it's a deep crab bearish, and you could see what happens here. This is your terminal bar. The next bar just completely crashes through. So I wasn't even interested in looking at this, because I saw this powerful move coming up, and you just let the pattern, you just ignore the pattern from that point of time. So this is the difference between how we trade and how other harmonic educators kind of share their knowledge, because they don't have this they don't have the discipline of looking at this, or in fact they don't have the knowledge of how to do this. Because we learned this directly from Scott, he's able to educate us on, you know, the previous mistakes that we used to make in just parking orders here, which would have just stopped you out straight away, and that's quite painful. So we are a bit more cautious in the trades we take, but we are trying to, you know, optimize our entry and make sure that we get into the right trades. So this one is still a no entry for me at this point of time. We do see that sometimes when the HSI starts ticking down, that you could still try to look to short this market, but I'm just trying to see if there's any bigger patterns, which is also something that I look out for. Okay, so you can see that on a H4 there is a trade. It's a Gartley bearish. So guys, I won't be touching this trade. This looks like about 100 pips away, but yeah, I don't think it makes any sense to take this trade. You could see that on an H4 the HSI is not aligned up, so I would wait for this guy to go up. At the moment it looks like Canadian is quite weak, so we are not going through. Okay, so there is a couple of questions around dollar, yen, Aussie yen. Okay, let me see if I can cover off those, but I'll go through some trades that are coming up. Okay, so I was trying to look for some potential trades. Unfortunately, I'm not getting any alerts on real-time trades that we can do, but here's something that I'm looking out for: pound New Zealand, which is about let's say 60 pips away. Oh, okay, what happened to that guy? Okay, so here we go. So I'm waiting for this fellow to go up, but as you can see, the HSI looks very bad on this. So maybe it's a trade that is not worth looking at for the moment. All right, Euro pound. Euro pound, we tried to short it somewhere around here yesterday, and another one of the rules that we've learned is that, okay, if the trade is not moving in your favor in about 5 to 6 bars, you have to scrap it. So that's why you would see that we tend to cut out trades early, and this one we were able to get out at break even. So I'm not interested in engaging this market until it goes up to this level, 79.65. So let's look at RSI. Okay, so it's okay, RSI is at a top, but HSI is somewhere here. So this guy needs to move up to this zone and coincide here, then we can short. So I want to go back to my charts. I sometimes try to look to see if there's any weekly level around here that will help me in my trade. So we're looking at 79.65. This is 79.93. So okay, I can't really find any levels here. Oh yeah, this is a weekly low here. So maybe there is some validity in this trade. So I'm going to look, keep a very close eye on 79.60 odd over here. Okay, so let me answer the next question that came up, and I'll go back to JJ's question a bit later. Which time frame are you looking at? So it depends where the pattern is formed. So if the pattern is formed on a H1, I will look to take the trade on an H1, which means I have to wait for 1 hour until the next candle is formed. So going back, if I can pull out that pound Canadian example, in fact that was on a 30-minute chart. Okay, so here you would see that I know that this is the trade I'm looking at. I need to wait for 30 minutes until I decide whether to take the trade or not. In this case, I say, nope, I'm not interested, because the next buy is a bit, it's completely showing me that it's bullish. Whereas if I try to execute this on the M15 time frame, it might be a bit dangerous. Unless you see the pattern on the M15 as well, then you can choose to use the lower time frame. So there was a question, why do I look at 45 degrees and not any other angle? So 45 degrees is generally the kind of angle that we want to look at when it comes to trading. So here's, let me go back to this example. I'll draw two angles. One is 45 degrees So the idea is that this line generally gets respected, and as long as the trade stays below this line, it's good enough. And then of course you draw the accelerated trend line, which is that drastic movement that happens. So you join all these tips, and so far this guy still looks quite good for us because it's staying within this zone. But even if it breaks out, because this is a type 2 test, we want to try and hold on as long as possible. So you need to give your trades a bit of breathing space, but if I was on a smaller time frame, I would look to take my money quickly. But I feel the big moves requires a bit more patience. So let's see how this pans out. Okay, so we are done with pound CAD. We covered euro pound, what we're trying to short. Euro yen. Now euro yen has a short at somewhere around, well, at least about 100 pips above. But interestingly, we saw a type 2 here. Now look at this, and this is what Terry called out in one of his posts, that this is showing a type 2. Now this was a type 1, and this is a perfect kind of a trade where it hit this level and then shot up. I remember this trade also. I was traveling, and once I landed, I was like so annoyed with myself because I completely missed this out. Now going back to the point, I'm roughly drawing a 45-degree angle, and this trade respected this quite nicely. But of course, if you're drawing that accelerated trend line, I guess you would be out of the trade somewhere around here. At the target one, you're already out, which is completely fine because this is a risk to reward of 1 to 5. Brilliant trade, so no complaints about that. So the next question was, what does HSI measure? HSI is a proprietary indicator from Scott Carney. You can only find it on Formation Seeker at the moment. It is, I would say, a modified version of RSI, but more sensitive, and it gives a better reading than RSI, which tends to be a bit subjective and a bit confusing at times. Okay, so for Euro Yen, we still have this opportunity to long at this level. Second entry for Euro Yen has already happened, but if we can find a smaller pattern to go long, which I don't think we are seeing, it'll be still a good re-entry. But at this point of time, I don't see it. And it's calling for a short at around 123.70. So if we can get into a long position as low as possible, this would be a potential target. Because what I've learned to realize is that, what I started to realize is that you should look for harmonic patterns in the opposite direction when you are trying to take your profits. Okay, so that's Euro Yen. This is Euro Swiss, which I've covered. So it's moving up very quickly. So we might have an entry on this. Let's look at HSI. HSI is at 72, 73. So I'll keep an eye on this for tonight. And if it hits this zone, if it crosses all of this, if it hits that 15 mark, which is very nice, this high, I'll be very interested in shorting this. Minimum risk, but a potential big move, 1:5, 1:6 kind of a risk to reward. I was looking at this on a 5-minute time frame, and you could see that it hit the entry level and it moved up very nicely. Now, how would you trade this? This is on a 5-minute chart, so you've got to be very focused, very attentive. You would draw this line, and as soon as this is violated here, you would get out of it. So you'll only make about 12 pips, but it's fine. So is there a type 2 entry? Not yet, but you could wait for it to bounce here. But on a 5-minute chart, I really don't want to do type 2 entries. This is really for a quick win if you're kind of like, if you want to practice. And I scale down when I trade on M5. So let's say if I risk 2% of my account for the big trades, I only put like 0.5 of my account on M5 trades because it can move very quickly. Okay, so I'll use it just for practice, or maybe you can just use it for demo because it is a very good way of sharpening your skills. Okay, pound Aussie. I'm waiting for a 5-minute test up around here. So we've got about a 40 pip move upwards. This is a bearish bat, which looks quite good. The HSI looks like it's ticking up. So this is a level that you can look out for. You can see that the confluence zone is very, very tight. In fact, it's almost on top of each other. So this, whenever the confluence zone is very tight, it means that there would be a strong reaction. Let's look at the pound Aussie. Is it an uptrend or a downtrend? Okay, so this looks interesting. It seems to be asking us to short almost at the high. Yep. So I'll be very interested in this trade because you see that, well, unfortunately, this is this week's high. So it's not established as a proper resistance because this week is not over yet. So that's the negative part of it. But if this was last week's high and there was a pattern coming up next to it like the Euro Swiss, I would be interested in taking that trade. So this one I will still observe. Still looks like a decent trade given that the HSI and RSI still has a bit of way to go and it could potentially get to this level. Okay, looks like this guy is still dead. Let me try and answer the questions around. I'm not quite sure what Terry posted about. Okay, so we are back here. So I just started using TradingView, find it really good, and let me see if I can check any of my, oh okay, it's down. So just try to look for me, and if you don't have a TradingView, you can follow me. I'll continue to post all my ideas there. Okay, what else do we have? Let's look at Aussie dollar. Aussie dollar had a long opportunity at 0.75. So I was quite, kind of torn, thinking, I think it was on H4, whether we could take this trade because of the fact that it's at a round number. But what happened here was that one thing, we were shorting the Kiwi, so that kind of had it against me. And I just realized that this guy just continued to fall, although you could see that it's stabilizing here. So this still might be an opportunity to go long, but at this point of time I'm not quite convinced that this guy is looking to turn. You could see that it has not moved out of the HSI oversold area, so maybe once it starts ticking out, it could be an opportunity to go long. Okay, so maybe for a quick win up here, but then again, I feel sometimes the New Zealand dollar is quite related to this, so which means our New Zealand dollar would start moving downwards. Okay, how do you verify the re-entry position? So let's say there is a move up out of the zone and it comes back to the blue line. So then that is where you would look to take a long position. But of course you need to correspond the HSI and RSI before you take it. Now I'm not saying that I'm going to take a long on Aussie dollar. I'm just observing. I still am not convinced that this guy is able to move up. So it's still watch. I still feel New Zealand dollar needs to come down. So Aussie dollar is also kind of related to it. So I'm being a bit patient with it. Okay, let's look at dollar yen. Dollar yen, I'm only thinking about short at the moment. I'm not sure if there's any pattern setting up to short, because longing this pair after the crash last week is not very good. You're better off going with the trend, but I'm not seeing anything. So no opinion on this. There is a long position at around here, which might be interesting. but I won't take this until next week, until this low has been confirmed as the weekly low for this week. Okay, let me switch over to pound. Where is the pound? Okay. Once again on the pound, there was a short opportunity which we could have taken, but we decided, okay, since we are in the the Kiwi short, we didn't want to duplicate ourselves. But you can see it has come down, hit target one nicely. You can see the HSI is oversold, so this might be a level where you could buy. So let's see. It looks like really the dollar pairs are turning bullish, but I'm just looking at the Kiwi. Okay, I would say that the pound dollar is still an up, but Kiwi dollar looks like it has reversed. So that's why I feel that, okay, it's good to hold on to pound, the Kiwi dollar short. Okay. Terry recalls a 44.70. Okay, let me see if there's any pattern there. I really can't see any sort of pattern. Maybe he drew a shark. So sorry, I can't. Not quite sure what that is about. Okay, what is the indication that Aussie dollar pattern is invalidated? So let's go back to Aussie dollar. This guy is still moving up nicely, so let's be patient on this. Aussie dollar. So there are a couple of warning signs on the Aussie dollar. First, that it has, okay, it's gone through the, see, in harmonic patterns, you need to see a movement within 4 to 5 bars. So it's been 1, 2, 3, 4, 5, still languishing around here. So if by tomorrow morning there is no movement, I would say that this guy is not ready to move, or then maybe it will move up, and then if it comes back down, I might go into the long position. But at this point of time, really I don't want to do too much. Okay, so let's go back to Kiwi dollar. Okay, it seems to be moving up. I don't know, it really seems like it's finding some buyers here, but we'll continue to hold our short. It hasn't really broken this trend line, neither is it going down. It's just going back and forth. So I don't know if there's any news later on that'll help to move this guy down. So I'm not going to monitor the charts, I guess, sleeping in a while, and after that let's see what happens tomorrow morning. Okay, so I think that's it for today. I hope this has been a good session for you, and if you guys are interested in getting to know us better, do check out our webpage. We do conduct seminars here in Singapore, so do feel free to look for us, if you feel that this is something you want to explore and be able to trade the same way we do. So if there are no more questions, I will pull the meeting to a close, and I hope this has been a beneficial session for you. So I think the trade that you'll look out for is the Euro Swiss, and let's hope that we will see a good reaction, and if it's a good reaction, we should be able to see a very good movement. I don't trade precious metals, so unfortunately I can't show you that. Okay everyone, we'll talk to you again next week. Thanks for your time. Bye bye.